So Coinbase is getting sued by the SEC. Well, at least they got a Wells notice, according to Brian Armstrong, who said on Twitter in a thread today, Coinbase received a Wells notice from the SEC focused on staking and asset listings. A Wells notice typically precedes an enforcement action. So, if you're wondering what is a Wells notice, he did pretty good job of a simple sentence saying what it is. But basically, you can see just a breakdown here is that a Wells notice notification issued by regulators to inform individuals or companies of completed investigations where infractions have been discovered. Basically, the SEC was investigating or looking into Coinbase and I guess specifically their staking and listing process, and then said, well, this isn't exactly how you're supposed to do it, and that's what they're going after, right? So probably some sort of securities things, and typically it has enforcement is like a lawsuit or some sort of legal thing that goes down to fix the problems that they found. Now, Brian Armstrong has a thread here of, just talking points, but here he says 2 years ago, the SEC reviewed our business in detail and approved Coinbase to go public. Our S1 clearly explained our digital listing process and included 57 references to staking. Coinbase runs a rigorous asset review process and has rejected more than 90% of assets that have applied to be listed on the platform. I don't know. Good for you. Weird flex. You're denying things. But ultimately, Coinbase used to be like the stamp of approval. When you got on Coinbase, it was like everything was going right for you, and the price of whatever asset it was took off. Originally, Coinbase, I believe, started as Bitcoin only. Then it had Bitcoin and Ethereum, then Bitcoin, Ethereum, and Litecoin. And you can see built from that to where it is now, where you can buy almost anything, not really anything, but you could buy almost whatever you hear about people talking on crypto. And also talking about their super rigorous listing and review process doesn't really go well when Luna was one of the coins you were planning on listing that you only didn't list because it collapsed and came out as a huge Ponzi scheme. So maybe that process isn't as rigorous as it's put out to be if Luna was about to make it through. After all, Coinbase is a business, right? And they want to raise their bottom line. They want to make more money. And how do you do that? Coinbase's business model, they make money off trading fees. So they got to list more coins. That's why they rushed to list Dogecoin, Shiba, the meme coins when that frenzy was going on, because they didn't care if they're good projects or good things fundamentally, or it's the strong things going on there. They only cared that they could make some trading fee revenue off of people buying and selling the meme coins that were very popular. But I don't know, maybe Coinbase has the world's most rigorous asset listing process and they're actually top tier and everything. I just see it from the business perspective of they want to list things so that people trade them so that they make money. That's pretty much the basis of Coinbase, any exchange really. That's what they're going to do. But I thought it was really funny that Brian Armstrong, somebody replied to him in this thread and said, can someone explain this in NFL terms? Which is like a meme thing. And he actually did it. He said, imagine you've got both football and soccer refs on the field, but we're actually playing pickleball, fastest growing sport in America. The refs can't really agree on the rules of this new game, and one of them decides to change a call they made back in April 2021. So I don't really know what he's trying to go on about, I guess, because Coinbase, something with Coinbase, but it's just funny that he replied to this and tried to make a thing out of it when I don't think it's that big a deal. It's a meme. He took it seriously, tried to go out with it, and I don't think it makes any sense, really. But they put out an entire thing here. You can see we asked the SEC for reasonable crypto rules for Americans. We got legal threats instead. So obviously spinning it, because any company who comes out and says, we want the rules for Americans, we want everything to be good for Americans. No, they don't. They want everything to be good for their company so that they can make money, okay? They're a company. That's the basis. They don't care about you. They want to make money. Now, a portion of that, a side effect of wanting to make money could be wanting people to actually be treated good and want good things to happen to people, because then that can come make them more money, make people more brand loyal. But at the end of the day, a headline like this saying we wanted rules for Americans and we got legal threats. No, you wanted ways to make more money, and you felt like other exchanges like BlockFi, who had a lending program, were making money while you weren't. You wanted to do that. You wanted to be a BlockFi, but the SEC shut you down and you weren't happy about it. But this is a long kind of thing that they put out, blog or response they put out. TLDR, they got the Wells notice regarding undefined portion of our listed digital assets, our staking service on Coinbase Earn, Coinbase Prime, and Coinbase Wallet after a cursory investigation. We're prepared for this disappointing outcome. We are confident in the legality of our assets and services, and if needed, we will welcome the legal process. So basically saying, they got this notice, they're prepared for this notice, they're doing all this stuff, but there's some actions that people like Brian Armstrong and insiders and hedge funds took that's a little interesting, that maybe they're not so certain like they put out that they are. But for this, let's just look at their staking service that's in question here, listing their assets, maybe go over that. But the staking service, you go to the Howey test, right? And if you look at the Howey test, you can say an investment of money. If you're staking, yes, you got it. Let's say Ethereum to make it easy. You have to invest money into Ethereum, and then you go from there. You want to go in a common enterprise. Everyone is in this staking service. Everyone on Coinbase, right? You're using Coinbase's staking as a service. That's a common enterprise with the expectation of profit. When you stake something, you get a profit. You get a percentage that you say you're going to get back for staking. So you expect to make money and then to be derived from the efforts of other. You're using Coinbase's service. Your Coinbase is staking on your behalf. So you're using them. That's your efforts of an other. You're relying on other people, Coinbase, to do the staking for you, and then you benefit from that. So I think that there could be a case here that staking as a service and staking from Coinbase and stuff is an absolute thing, could be a security, and you could make a case for that. I don't think that it's hard to see all of these things going together and make that case. But the worst thing that we're seeing happening in Coinbase has to do with their stock and the insiders and the people who are so gung-ho that Coinbase was the next big thing, the next big innovator. Well, it didn't last too long. You can see one of the biggest people pushing this is ARK, Cathie Woods. She sold $13.5 million of Coinbase shares after her steady buying streak. So conveniently, she sold off $13.5 million into this rally, conveniently before the Wells notice went public and everyone heard about it and knew it was coming. So that's a little interesting, right? Coinbase itself, Coinbase stock, has been having a fantastic year so far. Even though it's down, you see today, it's fallen. It's down like 20% after hours, something, 77, all the way down to 64, 65. But for the year, that's still up 130% almost. So that's pretty good, right? That's insanely good. And all this stuff, Cathie Woods buying frenzy on this way here, made a ton of money. And just before some really bad news comes out, she's selling. And it doesn't even stop with Cathie Woods. Also, the insiders. You can see Coinbase down 20% after receiving their Wells notice. Since February 8th, 2023, no one on Coinbase's team has purchased shares in the company. Instead, company insiders sold over thousands of shares before the big drop. So even the insiders, they're dropping their shares, they're selling, they're cashing out, expecting this Wells notice, maybe knowing about it, and cashing out after a pretty good, hefty run-up. So that's kind of interesting, right? And also contradicts themselves, because if the insiders aren't buying Coinbase stock, you could say, okay, whatever. But if they're actively selling and getting thousands of shares sold after a rally, after the company seems to be doing better, this statement that they put out isn't really meaningful, right? Do they actually believe what they're saying? Do they believe this, or are they just saying it because it's the correct thing to say so that people who use Coinbase will continue to use it, or people who support Coinbase will want to support it? They say this, they say it like they're so confident, but behind the scenes, they are selling their shares and cashing out. So not great for Coinbase, right? Cathie Woods, the huge go-getter, innovator. Coinbase is going to be the next big thing. She's cashing out. The insiders, who might have known about this Wells notice longer than people on the outside, which maybe some insider trading going on, right? Who knows? That could be happening, maybe not. But at bare minimum, shows maybe they're not as confident in Coinbase's response to this as really they're trying to put out. That's gonna do it for this video. As always, don't forget to smash the like button and subscribe, and I'll see you guys in my next video.